We are ready to begin. Good morning, everyone. I'm David Maris. This is Wall Street Beats for December 6th, 2024. Today we have the A team. Maybe not the A team. We have a team. How's that? Paul Meeks checking in on Salesforce, simple CRM. Bob Morris talking oil and gas. Maybe we'll revisit CNQ and Viper. And Kevin Baker to talk about a couple names. I'm wondering specifically about Eli Lilly. And so why don't we kick it off, Paul? Tell us what you're thinking about on Salesforce.
Yeah, well, good morning, David. Salesforce, which is actually fairly important because it's one of the few tech companies that are in the Dow Jones Industrial Average, reported a couple of days ago, and I haven't been on Wall Street Beats for a few days, so fresh from my perspective, check out my note. Then after you do that, subscribe. But I will tell you that they announced their results, and obviously street likey because the stock was up 11% the next day. And the interesting thing was fundamentally not so inspiring. They grew the top line only in line at about 8%. I see that the secular growth rate going forward, even with an AI tailwind for Salesforce, is this is probably a secular top and bottom line grower, 6, 7, 8%. And that might even be on the EPS side with some benefit for EPS from stock repos. But here's the interesting thing. We all know that this company was founded and continues to be run by one of the greatest salesmen of all time, Mark Benioff, and talked a lot without quantifying it, which always bothers me, about this wonderful AI-driven product suite called Agentforce. And one of the worries that I've had, and I still have, about these enterprise resource planning software companies, think of Salesforce, Oracle, Workday, ServiceNow, companies of that ilk, is that they would be disintermediated by AI, not benefiting from it. And so there was a lot of anxiety about Salesforce going in, the fact that they delivered the numbers, not really inspiring growth rates. But Benioff talked about the wonderful features of this agent force. Now, is it going to be more important and better use to a enterprise than Chat GPT, which is your retail product? I would say absolutely yes. But he talked about all these wonderful things without talking about monetizing. When will it be monetized? To what extent will it be monetized? In the meantime, the stock is at a all-time high. And here's also a company that I've been worried about in the past because even for a tech company that is known to have, all the companies in my sectors have a very large discrepancy between GAAP and non-GAAP earnings, particularly with the exclusion of stock-based compensation. Uh, Salesforce has a even bigger gap between those two metrics, which makes me worry a little bit about the financial accounting. And we'll also see that the company, which got some love in recent years because they were threatened by activist investor, and so they disbanded their very aggressive mergers and acquisitions program and fired a bunch of people. Now they got their mojo back. Now they got people excited. And one of the reasons I thought you could support this stock a year or so ago is they finally got their costs under control. Well, now they see this as a mandate and they're hiring people aggressively. And I bet they are going to do some big, boneheaded, very expensive M&A deals because they now think they have the AI mandate. So, you know how I feel about it. Please don't chase this. I want to short it, but I'm going to lean into bakes. Why? Because I'm a contrarian here. The stock is on a flyer. I'm waiting for bakes to tell me when the buying is been exhausted, when the stock turns down, and I will hold off. But you can see that I think the stock has gone way too far, too fast, and I will short it at some point. I'm waiting for my technical guru to tell me when.
Yeah, so
I
Kevin, what do you
appreciate
think?
I appreciate that very much. Do not short this stock yet, not even close. And if I have to, drive to South Carolina and tackle you and get you away from the ticket, I'll do so. No, I won't. But you get the idea. New highs, big volume, beloved name. Portfolio dressing towards the end of the year. But my main, tiebreaker here is volume. I talk about volume, I don't know, maybe too much, but I've just found that over the years, it isn't what people say that matters; it's what they do. This is a gap up on big volume on earnings day. That's what we're in this business for, is to find these. So now for Paul and for all of our subscribers, anytime we talk about anything, I put it in my system and I look at these things every single night. So it's not going to be anytime soon, but I will come in and say at some point, hey, the volume trend is reversing. This looks like it's getting distributed. It's not acting well on good news, and it's time to pull the trigger. I'm going to talk about a short later on in this. You see the tease, but this is not a short right now, not even close.
I appreciate that, dude.
Delighted.
So, Paul, you teach at the Citadel. When you're talking to your students about, like, executive compensation and and that, and do you explain, or how do you think about it? I'd be interested in the other two because on Bob's and Bakes's view. My view is that, look, it is compensation and it is actually an expense.
Yeah.
We can argue about how to define that expense, but Black Scholes does a pretty good job, and so yeah, we should include it. But what do you think?
So two things, I encourage the students, whatever source we use, Yahoo Finance, we use Bloomberg, we use Y charts, to make sure that you know what the estimates are. And then I tell them from all the sources, the EP estimates that you're seeing are undoubtedly non-GAAP. But if the street's going to follow them, so I encourage them to follow them. But then my caveat, David, is particularly in the tech sector, with my tech sector analyst on our student managed investment fund, I've always complained, even on air, that I feel the same way you do. Our sector is very heavy with stock based compensation, and it is a recurring item. Isn't a one off exclusion from GAAP earnings supposed to be, for something that's rare? Well, this reoccurs. So I think it should be definitely, but I also have to trade on the Wall Street wisdom, and I have to trade on, do I feel better about a company's prospects versus the published number for EPS, which is non-GAAP, or even the whisper number for something like Nvidia. But yeah, I think it's bullshit. I've said that for a long time, but they haven't asked my opinion over there in San Francisco. But yeah, so I try to explain everything, but I say, hey man, if you're going to trade, you got to know the estimates, and the estimates, unfortunately, are non-GAAP EPS.
Bob, how do you handle that?
Well, in energy, in the E&P sector, really nobody cares about earnings for two reasons. One, there are two different accounting methods, so it's sort of apples to oranges on those that are full cost, versus the exploration side. And two, they're carrying, basically the sins, the detriment of their past sins, and that they have a cost pool that reflects their cost basis on their oil and gas drilling over the past 20 to 30 years. And so when you put DD&A in there, which is non-cash, obviously, that's a very big number for a lot of these companies that doesn't reflect what they're doing today necessarily. So in the E&P sector, everybody's always looked at cash flow as a multiple, or you can look at EBITDA, but earnings is sort of meaningless for a lot of these companies. And you look at, if you look at the earnings multiple, some of these names would look hugely expensive just because of the fact that that DD&A charge reflects their higher finding costs in past days. But so that the stock-based compensation really sort of is a side effect as to looking at the cash flow.
All right. Well, it's a good segue into CNQ and oil and gas. What's going on with this space right now? It seems like the ones that I own are a little weak lately.
Yeah, it's been a little bit unnerving. So we talked last week about the fact that, on oil, it's easier to make a bear case than a bull case. And the OPEC came out yesterday, and as expected, they were going to said that they were going to extend part of these production cuts they announced last year another 3 months. So they've continued to push these back. Originally, they were supposed to start at the end of September and gradually putting some of this curtailed production back in the market. They pushed that back to the end of December. And then yesterday they came in and said that no, we're going to now push it back to the end of March before we start to put some of this curtailed production back in the market. And the reason is they're just concerned about the supply demand balance globally. And it's more on the demand side. You've got weak demand out of China, and you don't have really production growing all that much. You've got it growing slightly in the US, but these companies are maintaining their discipline. But that's a bit unnerving because, as I said, it was expected that they would do that. And after they did it, oil's up another buck today. And so you look at all the energy names, they're off 2, 3, 4%. And I think people are just, sort of jumping out here ahead of what is some nervousness about the oil price. You've got a new administration that's going to put tariffs on China. You've got a situation where you're probably, hopefully, going to see a little bit less geopolitical premium in the Middle East if we can, the administration can sort of broker some peace deals over there, whether it's with Israel or between Russia and Ukraine or whatever. So some of that geopolitical premiums coming out at the same time. So, it's unnerving, and you're looking at these stocks here. I'm going to have Bakes jump in here and talk about some of these names, but as you know, CNQ has always been one of our favorite names. It's been pulling back here along with all the other names. The one name I did add a little bit to this week, although it's not at my technical level yet, but these things are so volatile. I want to add a little bit to Viper because I don't have a full position in that yet. So add a little bit to that. But otherwise, I'm just sort of waiting and watching here. Yeah, it's a little bit unnerving. I'm not bailing on any of the names here, but clearly the market's making some rotation here out of energy. It looks like in the consumer stocks this morning. But on the technical side, I'm interested, Banks, your comments there, particularly on CNQ as it continues to pull back here.
Yeah, I appreciate that. We talked about this on the pregame, and we've talked about it offline, for subscribers and stock kings and what have you. And my bottom line here is that I don't want to see this stock spend much time below 31.66. This is a pretty long support level that goes way, and we're not far from that. So the volume's picking up on the down days. My sell discipline would have kicked in here when it closes below the 200-day moving average for the first time at 35 or so. And then here, the 50-day crosses down through the 200. And, I would be out of 2/3 of my position if I was here. There's so many gin joints in the world. I wouldn't walk into this one. But I'll help you as best I can. I don't see anything going on here right now. And, you've forgotten more about the fundamentals in the oil and natural gas market than I know, but this is not a chart I would stop on.
Yeah. So, and like I said, it's unnerving. We're being patient here. I'm probably a little bit early, but I added a little bit to the Viper, which is a royalty trust, unit royalty trust name that I like here. Again, I bought it down here closer to 50. And if I look at technicals, really, I should be buying it at 47.50 is the first technical support. And then 42.50 is the next technical support on that name.
Yeah, what is their affinity for venomous serpents? That's not a good marketing ploy in my book, but
Viper.
Yeah, it was an offshoot of Diamondback Energy, so they keep using these.
I know that. That's why what's next, moccasin?
I don't know, but if you're in Midland, Texas, you know that you're in rattlesnake country.
Yeah, I hear you.
I have a question for you, Bob, and this is I apologize up front because I don't really know oil and gas at all. So if we think through the different scenarios for Ukraine, does that have an impact on oil and gas actually or sentiment wise? And what I mean by the scenarios, right? We have really two options. Trump comes into power and he follows through on, hey, listen, whatever horse trading that has to be done, Russia pulls back, they don't pull back, but the war winds down, or it doesn't. And at what point, like, does the market care about that, or does it not care about that?
I mean, it cares a little bit on the margin in that Russia is a big oil producer, and the current administration trying to put a lot of constraints on Russia as far as their exports and selling their crude oil in dollars, and it didn't work. Their crude oil still made it to the market, but if you've got less of a political overhang there, and it makes it a little bit easier to, legally or officially, so to speak, put their oil in the market on the margin, it's not a positive for oil because they want to put as much oil in the market as they can without any constraints or having to, put it out the back door and things like that. So, if Trump's able to broker a peace deal there, maybe it takes some of the handcuffs that really aren't working, but some of the handcuffs off of Russia in their production and exports. And remember, Trump wants lower energy prices. His biggest thing as far as reducing inflation is if he can bring energy costs down. And as we've talked on here before, this whole mantra of drill, baby, drill, that's not going to happen. Where you might see some incremental production is if it frees up some private equity capital to put in some of these small private companies that can then ramp up or start doing some more drilling. But as far as the Chevrons, the EOGs, the CNQs of the world, they're going to stick to their discipline. I don't think there's any incentive out there that would make them go out and all of a sudden increase their drilling activity by 50% or anything like that.
Hey, Bob, I recommend to you, if you haven't seen it already, the show on Showtime called Landman.
Yeah, I've seen the clip of Billy Bob, talking. He's dead on about these windmills and all the energy and that it takes to build and transport and install and lubricate these windmills. Yeah, but it's eye opening for those people who think that green energy is free.
Taylor Sheridan's really going out on a limb with this new genre, independent, unpopular industry. And, Costner's going to go make bad Westerns, so let's get Billy Bob Thornton. I love it.
Yeah.
So, Paul, you were really busy this week on media. You're almost like the Taylor Swift Kelsey of our A team here. What were you talking about? Where were you?
Oh, this week? Well, I'm
Yeah,
actually on CNBC in a couple hours. I'll probably talk about CRM some more. But what happens, David, is this time of year, particularly after several years in a row where tech has outperformed, they bring me in, right before the holidays and say, can it possibly continue in 25? And I answered the same question in December of last.
And what was your answer last year? What's your answer this year?
So I'm still constructive, but I will tell you my list of potential buys is shrinking, because even I have, started to recognize that the valuations in some of these stocks are preposterous. Like, for example, of the Mag 7, I only am interested in NVIDIA and Amazon, not the other 5. And I had been a player in all of them. So realistically, still like the sector, but my potential fresh money buy list is getting smaller.
Yeah, I think that's a theme all around. So, Kevin, I said earlier this week that I put on a little trade of Lilly as a small trade just because they had some great news. I think it's going to be a great marketing thing. I think the stock didn't go up as much as it should. But you're kind of warning me like, hey, that might not be the best idea. So tell me what you see with Lilly.
Well, it all depends on time frames, So, this is a decent move from 7-11 to 834. That's real money. I get it. But, looking long term, this looks like a pretty classic short rolling over activity to me. You have a gap down here on the earnings release. And so whenever, you see the cold, hard numbers and you hear the commentary both on the call and post the call, and that can't get the stock going up, I say, okay, what's going to get it to go up? Everybody knows about GLP-1s, and it's been a monster for, 500 points, or whatever the number is. The volume picks up on the downside here. Okay. And this is just this kind of thing that my eye is drawn toward. And I think that everybody sees what I see, but I guess I don't know. I had PTSD from '87 market crash, and so I just get drawn to these things. So when I see more pink volume on this than blue volume, I say, okay, this stock is not getting picked up by institutions; it's getting sold. And so here it comes down to 711. But I know 700 was your number. It hasn't hit that yet. This is a nice bounce, but I think it's the deadest of cats. And the volume is feeble. It comes up to this 200-day moving average, which is at risk of rolling over. And if it makes if it closes this gap, I'll be very, very surprised. And if it doesn't roll over and descend to below your $700 number, I'll also be very surprised. So I'm a stock market umpire. I'm the chartist. I call them like I see them.
But David, you like it fundamentally, right?
Yeah, in fact, I probably have to revisit now that we're turning the calendar page on the 700, because again, this data was really great. I think it's going to help them market. I think it's going to give them a good lead for the next year or two, marketing wise. And then if the Novo data is positive, I mean, that might be the black eye at the end of this year. Sometime in the next 2 weeks, they come out with this combo drug data. Everyone's expecting it to be positive, though. So that's my coming in is, well, what's expectations? The better sense of me says, look, just don't get involved right now. Neither one's very compelling. Lilly's not so cheap that that you have to be there. It could be at $700, but maybe it's more like 750 or another 10%, 770, something like that. I think we all know that valuation's difficult when you're arguing within 10 percentage points. You probably shouldn't be involved if that's going to be your buy or sell. At least the way I look at things, I want to be involved in things that have 50% potential. And when I'm wrong and it's up 10%, I'm still okay. Sometimes I'm wrong and it's down the 50%, but at least the going in idea is that there's enough upside, enough margin of safety that I'm not going to have that massive downside. Here, I'm not so sure. I don't think there's much that could derail it, that it drops 40-50% though. So that's another reason why be involved on either side.
And that Amgen news, so it looks like Amgen's going to be less of a threat than they were purported to be.
Yeah, the weight loss wasn't as great as the existing drugs, and so people are like, weight loss is interesting, that people want to lose more. Like if you're going to be nauseous for 3 months, you might as well be nauseous and lose more weight, right? That's the. But again, if insurance starts picking it up, and if Amgen gets to the market, that's another risk factor. But if they get to the market, they're going to have to compete on price, and so the more competitors out there, the more there's just going to be this price degradation. And I will say the people on Twitter asked me, like, we should do a Viking Therapeutics. The people who own Viking Therapeutics keep betting that they're going to be taken out for some giant number, and they're rabid about it. Like they're like the people that frighten me, where it's like you don't want to go against them because it's like you're a moron. Someone could, and a couple of them said, "Oh, Lilly should buy them." It's like, well, there's an antitrust thing. Like so you're looking at these things and you're like, okay, so those are the owners. The owners are people who don't even realize like Lilly can't buy them. Like there's zero chance of that. Well, they could abandon their current drug. They're not going to abandon a multi-billion-dollar profitable drug to go buy, the rabbit in the hat. So it's just the whole space is a little silly right now. Of company, what I want to find is I want to find the early stage one that has something that blows this data out. I haven't been able to find that yet. There is a Japanese company that I am circling, but I'm not so sure yet. They have a deal with Merck actually, so on something else, but they're a legit company. So maybe I'll reveal that one next week or something. Well, I think we're done for the day. Anyone have anything else?
I got one quick thing, because I really want to send.
Well, let's go for it.
Yeah, I want to send some props and some flowers to Robert Marson, this highlights Wall Street beats in our value proposition. In one example, everybody here has chops. I've been in I can't at least 6 different firms with portfolio management teams, and frankly, there's always somebody that you wouldn't let run a popcorn stand, and here, everybody, and maybe that was me, and I didn't know it, and I'm the sucker at the poker table. I don't know, but here's Robert Marson. He's a value guy, and usually when I hear value, I start thinking about charts and things that really get me going. But here's his pick, TAT Technologies, TATT. And people said, it's thin, and who cares? And frankly, I can't even remember what they do now because I'm so jacked up on my 3 cups of coffee. But here's TAT Technologies, Robertson right around here. And I give him credit because a lot of value guys say, well, my spreadsheet is sacrosanct and my valuation methodology is pristine. And so I'm going to sell it right here because it's at, 6 times EV to EBITDA. I'm making these numbers up and I'm going to go. And I like to think I've been a little helpful, but I think Robert does it on his own. Let it ride. Bachman Turner Overdrive. I tried to get the rights. The lawyers shut me down. But here's 2849. I misspoke yesterday, Robert. This is the other chart I had was incorrect. Here's the '07 high. We're $3 away from it. Benchmark has a $30 price target. You've got a price target that's probably north of that. And so you're taking a double and you're letting it go. And so I just, if you haven't subscribed to us, and we've got, I'll put our retail people up against anybody. I'll put Maris up against anybody. I'll put Meeks up against anybody. I'll put Morris up against anybody. We just flat out make money. And I subscribe to all of our competitors. I really do. And they don't make you money. They talk about, economic and jobs reports, and tell me how you make money from a jobs report. Please show me and I'll do it. I've never seen it. So that's my rant, but kudos to Robert Marson. He's a closet momentum guy, and he's going to shoot me when I go to Philadelphia the next time.
I gotta say, so ending on a high energy. I like it. I will agree on that.
I've had no sleep. I'm on caffeine and vitriol right now. That's what those are my. This is a great country song that I'm working on. You're gonna like it. So
I hate to see you well rested.
Me too.
That is though a good advertisement though to say, because I own TAT because of his pitch. And it's been a great one. Israeli company in the middle of they're not in the middle of a war. Israeli defense company, obviously based in Israel. Not a name that a lot of people would have the courage to pitch. And you're right. One of our colleagues was like, it's so thinly traded, I can't. But he came out and said, look, if you want to buy it, trust me, the supply is there. And it has been a great call. So with that though, I want to say have a great weekend, everybody. We'll see you here next time. If you like what you're seeing and you need that high energy jolt in the morning, or if you want something a little more laid back, either one, we'll get you that. WallStreetBeats.com. Subscribe. Check us out. Talk to you soon. Have a great weekend.
Keep smiling. Thank you.
Well done. Good job, David.
Thanks.